The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Let me just answer this question. Basil, is Intel on your radar screen? I said yes for the SMHs. All right, here we go. Thank you to our host. Great programming from 8 o'clock this morning, and hopefully you'll be tuned in for the rest of the day. Dow's up 61 at 19,183. What does that mean? It means at an all-time high. Leg D in the daily. We've got leg D in the S&P. Oh, wow. This is fascinating, and I'll tell you why. I'm preparing my 3-session course, my webinar coming up December the 6th, December the 20th, Tuesday, and Tuesday, January the 10th. And everything about it is going to be, this is going to be probably the most practical, most innovative, and most constructive series of webinars I've given in many years, because this is going to be, rather than a webinar that is based on the future. Remember, we've been looking at Dow all-time highs. I've been giving webinars on that for at least a year and a half now. But most importantly, what we actually know, it's this year and last year, 2 years. So what we've been looking at is how do I apply this? What's the practicality for those people that have just started my opening call, my newsletter? Hopefully you're beginning to get the sense of how important a peak D is, the fourth highest peak in the Chapman wave methodology. And most importantly, look at this. Why did I not even usher a sell signal today? I cannot do it. The E-mini is in leg C right now. Look, there it is, leg C today. Went to a high of 2213.75. There's a 120-minute, but look how fascinating it is. You know how I talk about the Ds, how important they are, what they mean, how you construct them in the Chapman wave methodology. Well, have a look at this. This is the schematic. Come down, identify the lowest left side low bar that starts a buy signal, goes to an A, uppercase letters on the way up, lowercase on the way down. Your expectation is to get to at least 4 higher peaks. That's peak A, B, C, D, uppercase. At D, other things can happen. You can even go E, F, G. You can even recycle to a brand new instant restart that says not only are you going to go to another 4 higher peaks, you're probably going to go to 5 if you have an instant restart. So let me show you. This is A, B, C, D. That's the pattern that we're looking at, higher highs. Here we are. Leg C in the E-mini. I'm suspecting that you should get at least a D. The MACD is very strong. The moving average convergence, divergence. The stochastic's turning down, but it's still at 94%. 94% is really strong. Look, here's a leg E/A. What does that mean? E is, be careful, yellow light. A is yellow light, forget it. Green lights all the way through, even if there is a pullback. So I'm going to have to make some decision come the close today and going into the weekend, the start of December. Look at the monthly chart, leg C. This is very bullish. It means you could have a very sharp decline. You could even go underneath, not likely at this point, but go underneath November's low of 28.50 in the E-mini and still go to a D. It's possible. Look how important the D is. Look at that D instant restart. Took you to a D in the E-mini right there at 2,084.50 in July. And then the very sharp pullback under 1,800. So that's how important it is. So this series of webinars is going to cover right in the beginning. How do I identify? How do I label? What do I do? All the time I'm going to be saying to you, identifying it is important. But learning the techniques, how do you draw the arch? How do you draw the straight line? What's this called here? This green and dashed red pinkish line. That's called the inside track. You often get it in channels, but you can also get it in a rising wedge or a lower wedge or an expanding wedge. How do you do it and what's the purpose? What does it mean? All of this has nothing to do with peak A, B, C, D. It has to do with trend lines. What's the importance of the MACD? What's the importance of the fact that the weekly MACD is only now crossing positive, still way under where it was back in the July-August highs, and yet the price has gone much higher. Well, what's with the stochastic at 86%? A very quick move to the upside, paralleling the move that you've got in the leg. I'm going to be discussing that. And this is what I'm going to be teaching. So how do you trade? If you want to do short-term trade, how can you use the left side, right side price time match? How can you draw these trend lines? What's the meaning of a D? Why do we go E and F here? Wow, peak F. Look at that sharp decline this morning from the 2213 level down to the 2204 level, and now we're at 2208, testing the trend line again in a leg B. What does that mean? All of this I'm going to be covering, and it's an hour and a half each session. I'll give you homework. I'll give you homework in preparation for the next class. I want you to send me the answers, what you think. I'll send back, I'll give you a critique as to what's going on. Fabulous. I'm really looking forward to it. Let's run the numbers. INDU, all-time high today. And leg D, let me type that in right there. What am I expecting? Leg D. Why are we long? Expecting a peak D. When will I start to go short? Well, there are a couple of things that are going to come into play, and there will be questions about it. Question in the den. Basil, if the S&P and the Dow make higher highs this week and form a daily chart peak Ds, do you foresee much in the way of lower levels thereafter? Z, I'll be answering that in a moment, but let me get to what I'm looking at here first. So Dow's up 82. S&P, SPX.X, leg D. SPY, leg D. Diamonds did the D yesterday. Here we are, leg E/A in the weekly, but a very strong leg C in the monthly chart. This is very bullish going to 2017. Why? Because even if December is a very sharp down month, we should still go to higher highs to go to that leg D. Hey, but wait a minute. What about the IWM, which was kind of lagging? It's up 35 cents at 132.61. That's at a B. Now, wait a minute. You've got the Dow at a D, leg D. You've got the S&P at a D. The IWM is at an all-time high, but it's only a leg B, only in peak B. Surely, if you're going to get a D and you're going to get a sell signal, doesn't that imply that the IWM will fail before it makes a peak D? No. This explosive takeoff, the gap up on a news event that doesn't look back within 3 bars, but instead just soars like a rocket to the upside, it's dealing with shorts that have not had a chance. You name me how many people have been able to cover their shorts while they're waiting for a lower level to do it. I guarantee you that there are people that from November the 9th are still waiting to cover the shorts if they weren't stopped out because they put their stops in, buy stops in. But if they never did that, I would not be surprised if we still have short covering underway, and it could go on for a little longer. All right, well, now what I'm looking at is this massive leg B in the monthly chart of the iShares, the Russell, the IWM, the Russell 2000. That so far is a positive. Depends where we close today, and it depends where we are the very first week. And it also depends if next week all of the indices try to take out whatever the high is this week. If they do that, that means that December, you've got to wait until January until you get a peak in the month. I'll be back. Basil Chapman, Tiger Technicians out. We haven't finished looking at our different indices. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's continue. So IWM needs to get above 134.10. It's at 132.65. That's actually quite far to go. But that means that there's a little time delay here. And that means we won't get sell signals. Well, a lot of people are going to start shorting right now. I think they're going to believe that the action today was very much like a little blow-off top at all-time highs. I'm suspecting something else is going on, at least for the shorter term, going into early next week, maybe later this week, early next week. We might even attempt to short, but we're long. I'd love to keep that long position and have some kind of a pullback and then try to make higher highs. That'll be fantastic for the weekly chart. I need that. Okay, so IWM, QQQ, look at this. QQQ had been stronger earlier. Now it's down 0.62 at 118.32. I've been discussing this, and I really haven't had a chance to do it for subscribers. I said I would this week. I hope to do it tonight, but I'm actually preparing because I want it to be so relevant. I'm preparing my webinar series so that the exercises and the education that you get is absolutely relevant, just like my shows I try to do, relevant to what's happening right now so that you're able to trade. Look, does it matter to me that you're looking at, so Amazon, I've been talking about that 5, Chapman Wave 5, but a peak D in the weekly chart, peak F in the daily chart, and a leg F in the monthly. And I'm saying, wait a minute, something's wrong with this picture. Amazon should be soaring right now. UPS is adding thousands and thousands of workers. Federal Express, they're getting ready. They've had this fantastic weekend that went by, Black Friday, Black Monday, who cares what it is? It's just sales, sales, sales. And yet Amazon is not doing very well. But wait a minute, the RTH made a peak D. It's holding quite nicely, but it also isn't up at all-time highs. It's suggesting a bunch of things that are going on that I hope to be able to capitalize over the next few days. Most importantly, because we're at such an important juncture, that I think the relevancy of this coming Tuesday night in terms of timing for a series like this is it's extraordinary to be so lucky to be able to spread it out over December into January, when we've got a new administration coming in, a whole bunch of things. Look at this. I was asked about Goldman Sachs. Goldman Sachs just keeps recycling higher. It's at all-time highs. 218.77 was the high back in June of 2015. It plunges down to 138 in June of 2016, and less than a year later, it's at all-time highs. What a V-shaped pattern, and it's only in leg C in the weekly chart. And there's that pattern that I talk about, that H that can be very successful going to a cup formation. And I kept getting questions about it, questions, and I did not just jump on board. Well, we have some nice ones, so I can't complain, but nothing like this. This is amazing on the upside. Yeah. 220 right now, Goldman Sachs. So this is very important. Why is this it now, that the financial sector is just released from all the stuff that's been going on, and they're now free to just soar to the upside? Look at the XL. Well, look at the BKX index, BKX.X. No, BKX. Yeah, leg D today. So here we are. We're about to get to a point where this is where you start to expect some kind of a consolidation. How are we going to deal with that? Are we going to give sell signals, or just say, wait, there's certain stocks and certain sectors that have had an extraordinary run? Rather than shorting them, why not get your mindset to say, hey, wait a minute, this is a buy. Anytime there's a big pullback, I want to be buying and adding to that position. So that's really the issue. Is that the decision that we're going to make? And we'll be discussing that in terms of chart patterns. Look, this is a leg B in the monthly chart of the BKX index. This is extraordinary. This says that it's going right into 2017, and at 87.33, once it tackles the 90s, that's going to be, it's going to raise the base a great amount. So we're going to be watching what happens over the next few days. All right, let's go on. Gold. Gold is down 15 at 11.75. Why would you want to own gold right now when all those issues that we always talk about, the bank crisis and all that? There's really not much that's going on right now. I've been talking about, I talk about the peak D. I just showed you the peak Ds in a 10-minute chart. But wait a minute, what about a very long-term monthly chart, one that starts off in 2014? Yeah, the dollar is in leg D in the monthly chart. I'm going to be teaching about those Ds, what they mean, what's the implication. We made a D right there in the weekly chart with the left side, right side price time match, and it broke out. Is this an instant restart? Is this saying the dollar's going to scream up to the 105s? Well, we don't really know, but we have to see what happens. We haven't even got a sell signal yet. Look at this. This is a Chapman wave technique that in my CD introducing the Chapman wave methodology I talk about all the time. Is this going to work? This is the falling axe pattern. It's an expanding cone. Doesn't matter the size, the length, or anything. It has lower highs and lower lows. And then all of a sudden it turns around, takes out the resistance. If that resistance on the dollar at 101.80 is taken out, it'll quickly go to 102.06, and that'll be leg C in the daily chart of the dollar. And that's still saying that if you've got leg C, peak C, leg D, and then peak D to go, the soonest you can get anything like that will be sometime early next week. So I'm still positive. And this is the answer to the question I had yesterday. The question was, where would we start to see sell signals? What do the sell signals mean in the market? And I'll show you this. Look, let's grab this for fun. I never go here. Let's see what it's doing. Is this the chart that I want? Yeah, this is the 00 chart. This is the New York Stock Exchange. Been talking about this for a long time, a couple of years. And it seems to me that the difference between this pattern that's forming right now and every other pattern after the peak D top in September of 2000 in the New York Stock Exchange, 2,000 stocks trading right now up 60 at 10,878. And the top that was made October of 2007 at 10,387, that's number 2. And the top that was made, top number 3 that was made at 11,254 in May, hasn't been taken out yet. I think it's going to be taken out. I think the New York Stock Exchange is going to go above peak B at 10,903.86. If it goes to 10,903.87, that starts leg C, but it's still gray C until until it goes above 11,254. So this is a fascinating time today. We've got a breakout to all-time highs in the Dow and the S&P. We've got some lagging indicators. We've got some very important. I would say that the New York Stock Exchange, as a laggard, has to become not a leader, but it has to become a participant. And right now, it's being dragged up. And my thinking is that at some point, maybe in late January, early February, it'll start to lead. Lead in the sense that it's 2,000 stocks. So that means it takes a lot of energy to get 2,000 stocks to move. All right. So while we're at it, I'm going to do another thing here. I want you to talk about crude oil. Remember yesterday I said between 48s and 44s. What happened is there was some talk today about maybe containing, the production of oil. Oil is up 3.72 at 48.95, up 8.2%, touching the 200-period moving average yet again. I said I think it's going to be trading between the 48, maybe 49.20, and the 44s. If it breaks 43, it's in trouble. Nice move up today. We'll be watching this. We'll talk about it more when we get back. We'll look at the USO as well. Basil Chapman, Tiger Technicians Hour, and stay tuned. A lot more to come.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. I'm just drawing in some trend lines. This is what I'm going to be teaching as well. What do trend lines mean? A trend line, as opposed to a channel line, a trend line is where you've got points higher points or lower points. And basically what you want to do, look, here's the New York Stock Exchange. It's a very long-term monthly chart. I'm going from the top of October of 2007 at 10,387. And because there are so many points of contact, I'm using all the points of contact in late 2014 peak. A, B's a little bit, it's there, A, B, C, and quick D. And what I'm really looking at is the extension goes out. And basically what it says is that at some point, this trend line right here, let me expand this so that we can be looking at apples to apples instead of your eye goes to the wrong place. That trend line, and I'm going to make it green because if you break above it and close above it, that's very positive. This is a trend line support at the bottom. And what I would normally do, I don't like to mess charts up. All right, I'll do it for now. I'm going to put in what I consider to be the very strong resistance, and I'm making it pink. All right, and that's saying that at some point over the next few months, we'll be looking at the 11,240 to the 11,450 area as a target line, but it is also an extremely strong pressure point for reversals. It's proved that before. We'll see if it does that again. If that's the case, then the MACD, which is flat right now and a positive, but not showing incredible strength. Now, how do I explain that? It doesn't show incredible price strength. It does show good support. The greater that the fast-moving average, the green line, the 9-period exponential, the 9-period differential can expand above the red line, the slow-moving average. And remember, 12, 26, 9 are the parameters we're looking at. That means you can start to see much greater width in the bars, and it would be on the upside. But at 88% in the stochastic at a monthly chart, that is really strong. That's the reason why I'm not interested right now. I might be in a few days, but I'm not interested right now in shorting. In short, yeah, we've got a short. We just missed it by 3 cents. 3 cents? 30 cents yesterday. And that particular index is down today. But it's not a big deal because we know what the trend is there and we'll come back to it. We do have a short that's down about 31%. That's fine. But I don't want to get too carried away looking at the short side. I'm liking the upside for now. I'm getting real close to looking at the short side, but there will be individual stocks, maybe an index or two. But in the meantime, the New York Stock Exchange, that's how I'm going to teach you how to use trend lines. That's how I'm going to teach you how to use the inside track, Chapman wave, repellent, propellant zone. All right, here we go. So the question is on oil. I was talking about that. So USO had a big spike. It's an AC today. Remember, when you're underneath the major high of peak F at 11.79 in the United States Oil Fund, having gone down to the 950s and 960 area, what was that? 956 on the 14th of November. Very nice bounce. A news-related gap up today. I don't like these kind of news-related gap up. And you know what? These guys are wanting money. The oil-rich companies are now oil-poor companies because they are spending like they still are forced to spend like they had been before. In fact, they're only now getting a little bit used to of constraints. They never had any constraints before. And I think that there's a glut of oil, and that's what we're seeing right now. And that's what the monthly chart is saying. So, okay, enough with that. Let's go to the next thing, which is bonds. The TLT didn't take out the low of 5 days ago, the low of the 23rd at 119.25, but it is at 119.48 as a low. It's trading right now at 119.71. This is very important for the weekly chart. Remember, we spoke about trend lines. This is the line that I said to me is very important. It's what I call the Chapman wave. How do I call this? I haven't actually given it a term, an official term. I've used the term before. I call them parallel one-to-ones. It doesn't tell you very much. I'll think of how to appropriately name this. But you see the timing between the week of the 27th December last year, 2013, to the high of January of 2015, going from 101 to 138, then a decline to 114 in June of 2015. That's one price time lapse. From the low that was made right there, whoops, let me move this one. The low that was made on June, the week of the 26th of 2015, we get a price measurement which says the week of the 16th of December should see some kind of a low. It should see some kind of a base in the TLT. And yet, when I look at this, and the question came up, and it's a good question. The question was, could you look at the TNX in the different time frames rather than in the cluster of all those other guys together? And what we're looking at is the single leg up, A, has stopped at resistance at 23.95. There's a 10-year Treasury note interest rate. Is it 23.95, up 93 cents today? Wow. For those people who are locked in the rates at 3.50 for the 30-year, that I believe was up until just recently, congrats, because I think it's quite a bit more now. Okay, this is your peak D. There's a chance of an instant restart, but I'm calling it F for the moment because the MACD had a huge turnaround. It's got that dolphin look, and it looks like it wants to come down, but the stochastic is still at 86%, but it's way off the high. So I'm looking at this and saying, if there's going to be, let me make it real simple. I think that interest rates have made a low of significance, at least in the intermediate term, and that it's going to take a tremendous amount for us to get back on the 10-year to the 13.36 level if we're ever going to do that. We're almost double. Can you believe it? So this is very important for two reasons. One is that I think there's now a high-level consolidation, even if we make some kind of a top. That's number one. And number two is that the 200-period moving average that we gapped over, you remember Tom likes to talk about ICE, where you stop just before a most important trend line or a peak or a trough, and then bam, you break out of it the very next bar. That's what happened here, but it is a weekly chart, and it's coincidence that it happened to be over the week. But in fact, look, it's an amazing move. You're going from 21.26 high the week of the 11th. This is 2.126%. The very next week, the low is 2.189. I mean, that's big. And it goes even higher. So I'm suggesting to you that there's a high-level consolidation. I'll even put it in here. I'm going to put it in. I'm going to say, this is what I'm anticipating, that there's some kind of wiggle, and it's going to go not much higher, but it's also not going to go all that much lower. So I think I've answered the question there. Now, oh, that's the break. Dow's up 74, S&P's up 3.26, lagging. And what am I missing here? Did the dollar? Did I do the dollar? Did I discuss the dollar? No, I haven't really discussed the dollar, but I've talked about it, but I haven't discussed it, and I haven't looked at the euro. Oh man, look at that. I'll be back. Basil Chapman, Tiger Ignitions Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Let me just go through a couple of the questions here. So the FXI, I don't see any reason why you would want to trade the foreign markets. We've got such fantastic things. There's so many stocks here that are looking really good. So I'm going to say FXI leg C in the daily. Yeah, it looks like it's going higher. Peak F in the weekly. It's got a lot of work to do, unless it can get to 38.75 in the next 2 days. Yeah, I think it's looking quite good. Okay, no, I see. Okay, question there. Mike, no, we're getting the charts very nicely here. I'm not sure why you are not getting them. So just refresh. Maybe that's what it is. AOE, OIH was the question here. OIH is, oh, look at that. So it went to a peak. I've had a little trouble with these, and I found the best thing is just to call for a restart right here, and I'll be talking about that. So this is an AB. Oh, that even works better. So here we are. Parallel wave count, ABC, and then you go to a D. Is this an E or a brand new A? I'm not sure. I'm going to call this as well. And the weekly charts of the market vectors oil service is very interesting here. So let me just do this. I don't like to be wishy-washy. There's no need to be wishy-washy. The MACD and stochastic in the weekly chart are suggesting that the breakout that we're seeing right now, if it can hold through Friday, I'll make it real easy. If the OIH, the Market Vectors Oil Service ETF, is able to stay above 31.30, it's at 32.40 right now. If it's able to 31.27, yeah, call it 31.30. If it's able to close above that on Friday, I'm going to say that is more likely a B, and that we should go to a C and a D in the oil service, and that's new leg C in the weekly. Finally, it's got there. That's really important for me. That says that I'm probably going to, over the weekend, I'll have the close today. A whole bunch of things are going on. I'm probably going to put an up arrow to say we've gone to a buy mode in the Market Vectors Oil Service. I didn't expect it to be this soon, but it is. And that is a positive, and it's also a positive in a sense for the market. So let's go to the next question was AEO. Is that American Eagle? Right. Whoa, down 2.61 at 16.30. Someone said this a long time ago, and I thought, oh, that's kind of a cute expression. What was the expression? Oh, the expression was, if you want to mess with the teenage apparel area, watch out. No, those weren't the exact words, but basically that's what it was. And I've looked at it ever since. I've thought, what a fickle group. Well, we know that teenagers, I mean, come on, we were all teenagers and we could chip and change or whatever it is. You're all walking this way, and then suddenly someone walks that way, and everybody starts walking that way. So that's kind of sheep. Most teenagers are sheep. That's the way they grow. Now, what's really important about this is that it's very negative. Now, if I look at, I don't want to get into this now. I really want to do a detailed study of it. That's the RTH, the retail market vectors, retail ETF, down 17 cents and 78.28. And then you've got the XRT, which only has a couple in them, and it's holding a little bit better in the monthly chart. But that has Groupon, GPS Gap stores, out of where I think Francesca, Sears Holdings, DKS, the shoe company. Let me just do my homework on this before I make some kind of an explanation of what I'm seeing. I just don't think it's worth it right now. I'm doing it kind of off the top of my head. I really would like to get some numbers. And my numbers that I'm looking at right now are to say, this is the sales period. It is the manufacturers that have already done all their work. They've shipping everything out. They're not, they're pretty much done. So the retailers, it's what you hear and how they respond in January to what the sales were for the holiday season. What I'm really looking at this particular point is you've got your peak D already in the daily chart. It's holding very well. It's not responding today with the Dow up 80 and the S&P up 3.5. But in fact, it's this weekly chart. Is this a single leg? I'm going to draw this in because I'm only putting it in here as a suspicion. I think this is what we're going to see. We're going to see with all the bargains and everything that the retailers basically limited their upside potential for profit. I think they're trying to capture. They've been forced into competing like a Walmart and an Amazon. Walmart's trying to go up against Amazon. Give me a break. I mean, that's almost impossible to do, but it's trying. And it's important. They haven't got any choice. So at this particular stage, my gut says it's going to be a disappointing season. But wait a minute. Why would you be looking at a Ford acting so nicely at 12.12 right now, up 19 cents, and a General Motors, we are long General Motors, acting beautifully? It's at 34.88, about to challenge in leg B. And that's another reason why I don't really want to go short now at this particular point when I've got some stocks that are very important that are only in a B. A B in the daily, it can fail because it's way under the previous high. An F/B, and I think it's a B in the weekly chart, and a B that's breaking out now. Well, the day is not here. Now I can lift up. You see, I like to be very conservative in trend lines. I'll talk about that in my webinar. Folks, this webinar, I think, for the simple tools that I'm going to give you, the amount that you pay is like not even going to Fenway Park for two people. It's really, I've tried to keep it as low as, and if you're a subscriber, it's even lower. But anyway, what I'm trying to do is I'm trying to teach you basic concepts and how to use them. A trend line, what does it mean? Why does it, in my work, what does it mean? Now that we've broken out, I go to the next level, and that's the level that is going to go from that high right there in General Motors, the high of March of 2015 at 38.99. Why? Because I want to be as faithful to trend lines as possible. I want to also be as conservative as possible. I've just broken one trend line. Now I'll go to the next one. If General Motors breaks into the 35.90s, 36 area in the next 4 or 5 days, I don't know if it can do that quickly, but if it does that, not only is it going to test the left side, right side price time match in a shorter period of time than the high of December, the week of December the 11th of 2015 at 36.52 to 36.88 actually is the level that we're looking at the beginning of December of 2015. But it's telling us that there are sales going on, and sales, it's really important that the public feels confident enough that they can keep buying. 17 million cars and they still buy. That is extraordinary, and that's a really good sign. See, this is why I think that President Obama made a huge mistake. He didn't talk about the economy in a structured way as if he understood what was going on. I don't think he really did understand deep down as an economist. He just knew politically what he wanted, but he should have said, we've got growth. We've got 17 million cars. What are people talking about that there are no sales? Those are things that he should have said. And that would have helped. But it's very interesting because Trump isn't even president yet, and all the actions that he's taken, so we'll find out, is this buy the rumor and sell the news so that January the 20th we make some kind of a top and then we come down for a reality check? But he's saying the right things right now for the market. And that's why we're looking at, and the other thing is that the defaults in the payments for the automobiles is hitting a record high. That is what's going to create the next big downside smash. Anyway, Basil Chapman, Tiger Technicians now. Oh, we got Scott in Safety Harbor. Sorry, Scott, I just saw you. We'll take you straight after the break.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or Swim. Next on TFNN.
Right now we've got Scott in Safety Harbor. Hi, Scott. How are you?
Real good. I just had to leave the line for a second and sell out of rig. I bought rig yesterday at 1060, and this, wow. I'm getting good at this, I'll tell you that.
Oh, my, they're very good. Oh, man, folks, rig is trading up $1.77, up 16% at $12.79. You bought it yesterday, huh, on that gap down?
Well, it's all beaten down. I mean, again, you have to. I go back to my same theory. The Kennedys, the Carnegies, all these wealthy families made all their money by buying things that no one else was interested in, buying quality at a reduced price. I mean, it's that simple. That's the only thing that I can tell people how I do it.
Well,
remember I was in CX at $3.80. No one even knew what it was, but I kept seeing trucks everywhere.
Very nice. Have to congratulate you on that. Now it's funny because you said I said Scott, and then in the den everybody knows who you are. So they said what were they saying here? Whoops. I'll just try to find it. Scott. Just a question. I can't remember. I can't see it right now. So what I did is I quickly went because I remember having a sell signal on Scott, which is Scott's Miracle Grow. And I thought, oh, perfect timing. Winter's coming. Why would you want to buy Scott? And I haven't got it typed down. I don't know why I lost the notation, but it had this doji candle back on the 9th of November. And the next day it was at 91.66, and the next day it plunges, and 2 days later it's at 83. And I thought, great, what timing, leg D in the daily.
I've been so busy that I missed my yearly trade that I've made a trade for 5 years now. I've made a trade. This would have been the 5th year on Tiffany's. Every year I buy it in November and sell it after Thanksgiving. I sell it right about today, right? And every year, and I got so busy this year that I didn't do it, and I'll be darned if it didn't do the same thing again.
Same thing with me. I did the same. I was looking, and then I looked at Tiffany just recently. I said, I think Tiffany's going to have a good year, and I completely forgot when I saw they gapped up yesterday. I said, oh, Tiffany, now it's very interesting. This has got nothing to do with what you're calling about, but I'm just going to mention it. We were invited to go to in Boston on Commonwealth Avenue, 395 Commonwealth Avenue. It's the only existing Tiffany building in the country. There were about 6 of them. This is the only one that's left, and we were invited for a tour, and it is spectacular. It is amazing. Not necessarily my kind of art, but just the work and everything. It's the Tiffany building. It's owned by the Ayer Mansion. And Ayer was a famous guy, and he made a lot of money, and he made a lot of money in the early 1900s. His brother did, and he was actually part of it. And he was a physician. No, his brother was a physician, and they sold those elixirs, all the different kinds of medication that probably had cocaine, all sorts of things in there.
Most of them, every one of them, yeah.
Right. So, and they made a fortune. Anyway, he got this building, and he was not a Brahmin, so he decided he would show them in Boston what they're going to do, and he built this building. So it's extraordinary. So anyway, this is very good.
One reason those medicines sold so fast is they knew they had to put a stimulant in it, because if people didn't feel a certain feeling, then they would not buy it again. So that's why they always use stimulants, and they do it a lot today with the OTC, over-the-counter products. They put something in it so you'll feel something, so you think, okay, it's doing something. So.
And they're doing it in some stocks right now.
Oh, absolutely. I've been besides my rig, I've been going back and forth in and out of X. It has a wonderful trading range of it gets right down to the low 30s, and then boom, back
and now
up to
it's
32,
got
33.
one more high to go above 33.78 for leg D, and then I think it'd be in the area where I think it's going to start to consolidate.
I will hold on.
Steel stocks are looking like they're about to consolidate. So, hey, thank you so much for calling, Scott, and have a great day, and I'll be back tomorrow. Don't forget, folks, go to the front page of TFNN, check out my 3-part webinar. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.